With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB on this Wednesday afternoon. I got it right today. I'm Nadine Blaney.
And I'm Juliette Sarli. And I know we're in Sydney, the weather might be nice the rest of the country, but here it is looking very dire. But the market, Nadine, I mean, we're getting close to all-time highs again, 0.7% gain on the CBOE 200, the ASX 200, very much nudging all-time highs.
Yeah, well, if you take into consideration CBA and what's happening there, topping $181 a share for the first time, setting a record market cap. First one in Australia above $300 billion. So that might be the pot of gold at the end of the rainbow, which we were just looking at outside our studios here.
Yeah, beautiful rainbow out near Wynyard. But yes, of course, that is really the themes of the day, testing these highs, the $300 billion club for CBA, as Nadine mentioned, the first Australian company, listed company to reach that milestone. And then, of course, uranium stocks have been surging here too.
Yeah, that was one of the key themes of the call today. It was our stock of the day, Boss Energy, because we've got Meta becoming the latest major U.S. tech company to really double down on nuclear to help power its data centers, of course, being brought out by AI. I was just looking at something online, and I don't know if this person got it right, but they said, okay, end of times, and AI just became in charge of a nuclear power plant. That's not quite what it was, but you get the point. We need a lot of energy going forward, and nuclear is clean.
Yeah, absolutely. Well, let's have a look at those uranium players, because that's where you saw a lot of upside. Boss up 8%, Paladin up by almost 10, Deep Yellow up 6, as was Bannerman Energy.
There's CBA, bring it up please. Drum roll, up 1.2% to $180.27. But a pretty strong day right across the spectrum when it came to those big banks, including Macquarie, which ended just above $216.
And we had a big move coming through in oil prices overnight, 1.5% higher to a 2-week high. That has lifted all the energy players as well. One of the best performing sectors, Woodside up by 2.3% and Santos up by around 1%.
It was just consumer staples and telcos that ended lower sector-wise. And you know what those sectors are normally known for is their defensive qualities. So that's been the day on markets.
All right, let's talk about some of the big movers. Now, Drone Shield. So Britain earlier in the week pledged the largest sustained increase in defence spending since the end of the Cold War. Drone Shield, a beneficiary of this, up 13.3% today.
Yeah, we've had a lot of conversation with some of our expert guests about stocks for a dangerous world, so to speak. Austell comes to mind as well. Main Pharma, getting hit again after that U.S. pharmaceutical giant Cosette moved to terminate its $672 million takeover bid of that drug company.
Well, we did see IDP recover a little bit earlier in the session, but closing down again 4% after that 50% drop yesterday. So, of course, warning on global immigration uncertainty. It looks like potentially the sellers moved in again on the close.
Income Asset Management jumped more than 23%, set for its biggest intraday percentage rise since October 2024. I'm going to do a mea culpa. I'm going to have to see what moved the market there, Juliette.
We did have that, and it might have been somebody like me who accidentally took it out of the prompter. The Japanese entertainment.
Well, normally I can figure this stuff out, but not today.
Lobbed a bid to buy PointsBet, sending PointsBet shares up by 10%. Tom Waterhouse was talking about that with Andrew.
Income Asset Management put out a business and trading update. Revenue is increasing, so everything looking pretty good there.
And just have a quick look at their travel stocks as well, because Virgin might be making a return to the board. So Bain Capital, who bought it out, as obviously it went bankrupt in 2020 because of COVID, now wants to sell a 30% stake to get about $685 million. You'll still see Qatar Airways have a 23% stake, but these shares expected to be listed at $2.90 per share. And brokers saying, look, demand from investors has been really strong. People want to see Virgin back on the boards. Qantas down 2%.
Yeah, interesting. I had a chat with my guests on the call yesterday about Qantas, but also both of them liked Hello World Travel as an alternative to that. And don't forget, we did have that web travel group last week updating. It's the hotels business, but obviously there's still some life left in travel.
Indeed. All right, let's get to our guest, Mark Gardner from MPC Markets. Good afternoon. CBA. What's happening? Everyone's super funds. Why does it keep rising?
We're coming into 12 cents in every dollar has to go into the stock. So and increasing. There's just with index buying. It really is unlikely to stop basically. The time frames are so long on those super funds. And the shift towards index buying overall globally just means that the larger caps just almost they snowball and attract more capital all the time. So you wouldn't say there's not necessarily any value there, but there's just always a passive bid. So probably a bit of a stretch, but even to see the ETF come into Bitcoin, for instance. Last April just been's move, we would have seen Bitcoin probably halve in that period, and that it just goes to show it's a really good example of a passive bid from an ETF and from institutions like that. I mean, we basically saw Bitcoin barely fall back at all in comparison to what it's done in the past. I think that's a really good example of how a passive bid can really hold up a stock. And look, it's nothing to do with valuation at the moment. That is the number one stock in Australia, and as long as we're all benchmarking to the ASX 200, that money's going to keep going in there. So not for us, but it certainly wouldn't be shorting it. That's for sure.
Do you regret not having CBA?
No, not at all.
Why?
Because we've been in a bunch of other things that have gone up a lot more.
Okay.
So gold stocks, and they're buying, having that cash available to buy really good growth stocks at the lows back in April. We've more than taken care of what CBA's rallied.
Good.
So.
And I mentioned defence stocks earlier, and you wrote for us about defence stocks, but you're not playing it necessarily individually with the likes of Drone Shields and Austal, is that correct?
Well, not on the ASX, no.
Yeah.
So we're playing it globally. So we do a fair bit of recommendations in the US and global. So we got Lockheed Martin, Raytheon, Leonardo, which is Italian, but basically playing for the NATO nations that are having to fund themselves, and Thales, which is a French company as well. But we've had Palantir and BAE Systems as well at different periods. But so the Defend ETF is a really easy way to get an exposure to those because it's got the highest European exposure. Because Trump's going to make the NATO nations pay at some stage, one way or another. So what governments will end up doing, they're not going to pay the US. They'll just fund the domestic companies, because the overall GDP spending has crept up to 2.5% of total GDP. Globally is now spent on defence, and it's expected to get to 3.5% in the next, by 2030. That's at 1% of total global GDP is an enormous amount of money to be flowing into a very small amount of stocks overall. So you've seen the likes of Rheinmetals up 2,000 something percent, is one of the German defence contractors. Saab, I think has gone up a couple of 100% this year as well, and is trading at forward PEs of 60, but the revenue that's coming in more than justifies it. So they're winning huge contracts.
Yeah, I thought it was really interesting. We had a virtual investor event last week, and it was very focused on Australian stocks, but we did a bit of an audience survey, and I was really surprised how many people were asking about European stocks, whether it was time to get into European stocks. So we'll do something on that in the future, but it just goes to show how times are changing, and investors are sitting up and taking notice.
Since we've had access in the last 6 months, I would say offshore investing from our clients is now exceeding ASX.
Really?
Oh, wow.
So almost instantly. Look, if we want to buy mining stocks or energy stocks or banks, sure, we go to Australia. But if you want growth companies and you want geographical specific stuff, we've now it's a big world out there, and you can get access pretty easily these days. So we're just going straight to the source, really, overall. Growth stocks in the US, you've got a pick of, you don't just have WiseTech Technology 1 and 0. You've got about 10 or 15 stocks that essentially, more than exceed those guys. So
Yeah.
we've just
Well,
got more
as
options.
Pointed out, even mid-cap stocks in the US are bigger than some of our big caps.
I think,
so.
small cap in the US would be
I
firmly in
think
the ASX 20.
anyone
so-
watching from the US going, oh wow, they just made a big deal about a $300 billion company.
I think WiseTech would
You're
almost
so
be
cute, Australia.
could almost be a micro cap in the US. But
I want to talk about takeovers. So, Brickworks, or mergers I should say, Brickworks sold Pats earlier in the week. Now it looks like this other company is moving away from Maine. What's the sort of outlook out there? It's sort of a bit
It's-
uncertain.
Yeah, there is a lot of companies pulling out of bids, and after expressing interest. So it's, I guess, a sign of slightly uncertain times. But I mean, look, if you look over the last 2 months, we've been where we were from Liberation Day to now. I mean, you've just lived about 2 years worth of market conditions. So where it goes to from here, I mean, look, I'm not as convinced this is a bear market rally as I was. However, this would be if we were to go back through record highs, it would be the first time ever in stock market history for that to have happened. So, but realistically, I'm not brave enough to make the call, because we could, we've had earnings come through the US, but they were pre-Liberation Day. The economic numbers are now going to start seeing some of the tariff effects come through. I think it's very much a wait and see. So we're very happily sitting in cash at the moment. And I don't see us going another 10%, but the risk could be to the downside, and we want to have that cash available to be buying in, because the China-US deal still is a little bit uncertain still. There's still 10% tariffs across the board. Whoever the reporter was that called Trump a chicken needs to be shot, because he's effectively
I
just.
think it was a woman, actually. I think
because
he
now
went off.
his ego
The
just wouldn't let.
Yeah.
There was immediate tariff announcements after
me
that.
Google
I mean,
it.
we just
Taco
need. To, I
trade.
mean, that just did not need to. He did not need to be dead.
Yeah, so it was, sorry to interrupt, but it was a gentleman who came up with the acronym, but it was a reporter who put it to Trump, and that's when he lost it.
And he lost it. He was really aggressive.
Yeah.
And I saw that, and my heart sunk, because any sort of surety, because I just don't think his ego can let him, let that pass. So, we'll just see how it rolls for the next couple of months, and obviously, yeah, it's very much a wait and see attitude, and I think until we see further catalysts, because earnings season was pretty patchy, and Nvidia really is. I mean, it's like is holding up the entire market there in the US at the moment. So it'd be interesting to see, how things play out.
Well, I think Jonathan today on the call said that he's not standing in the way. He thinks the bulls are in charge, and he also put a buy recommendation on Boss. So uranium, if you're going to buy uranium, you'd be buying ASX listed. When you think about critical minerals, because that's also a key plank and a key sticking point for Donald Trump right now in his relations with China, do you look beyond uranium to any of those other critical minerals?
Rare earths is hard, because it's more about the refining, not the rare earths. But obviously that's going to be, Lynas is the obvious play there. But look, I think uranium and copper realistically are the two main commodities that are, that have got deepening supply gaps. Look, I think Boss probably has recovered. I think it's only a couple of dollars from record highs. I think Paladin at $6.50 is that could quite easily go up 100%. If you look at global peers like Cameco, they're through record highs. Paladin is over $10 or nearly 200% away from record highs. It's going to be the third biggest uranium producer in about the next sort of 3 or 4 years, with that acquisition that it made and the dual listing in Canada. So overall, the thematic is very much playing out. The rest of the world is buying uranium wherever they can buy it. The ASX, I don't know what our problem is here with uranium, but they're two of the cheapest uranium stocks in the world by a long way.
All right. A quick word as well, just because it was yesterday's big story. We didn't talk to you yesterday about IDP education.
Yes, I've been a firm seller of IDP for a long time, and I find it quite funny that it's been the fundies' top pick, like in the AFR, 3 or 4 years in a row. and it's just not playing out. I feel for them because I think it's the market's over ambitious expectations on the company. They're having to deal with what's been handed to them, and a huge shift back to nationalism is it's not really something you can, like, as quickly as it's happened. It's not something you can really compensate for. So nothing necessarily wrong with the business, but I think AI is starting to eat into the education sector as well, and I think a couple of bad players. It's very easy to target, the foreign students, etc., and for political points scoring. So, yeah, I won't be looking at it anytime soon. But I think until this, the Trump with the tariff and the tariff wars, etc., has really boosted nationalism. We've been looking at platinum and silver particularly, because they're two the major producing nations. The rest of the world is now being pushed into being nationalists themselves, and they're putting tariffs on the US, or they're kicking out major mining companies from the first world developed nations, and there's going to be supply issues, particularly out of South America. Silver supply will be very constrained, and that's edging up towards towards those multi-decade highs. I think it's only about probably 50 cents away. So yeah, there'll be still things to play out, but that nationalism's not going away, and that's not going to play well for IDP, which unlucky basically. Nothing to do with the management.
All right, thank you, Mark.
Look at the time.
Always.
Time flies when we're talking to you, Mark. Thank you.
Mark Garner from MPC Markets. Yes, almost 20 past, so definitely closed out the day. But of course, the stock of the day was Boss Energy.
It was. So not just Jonathan Takadina from MPC Markets, but also Michael Gable from Fairmont Equities took a look at this one, and this was from a technical perspective. Take a listen.
So what we've seen is that we've had a piece of news that sort of has surged the markets to the current levels. We needed a new catalyst, so we've seen some consolidation, and this is the new catalyst for another leg higher. So I definitely wouldn't want to be taking profits. Give it a chance for it to run on higher from here. And out of the Australian sort of names, Boss is the best fundamentally as well.
I think this sector can do really well. So where gold has been, the commodity that's been doing really well over the past 12 months, and I think can continue to do well. I think uranium is building up to be the next, sort of big sector that everybody's going to be talking about, and where you'll see some fantastic gains. So, in short, there's not much supply out there for a lot of demand, which is only increasing, and Jonathan's touched on, the US government looking to quadruple its nuclear energy by 2050. We're seeing deals like what was announced overnight with Meta securing 20 years worth of supply.
Juliette, we had a few double buys on, maybe I'm exaggerating, a couple double buys on that episode of The Call today. So you can find that online if you haven't watched it. We crossed all sorts of sectors. We talked retail, we talked industrials, some miners. So yeah, lots in there.
Yeah, I always really enjoy chats with both those guys. Great episode. All right, let's have a look at the leaders and laggards in today's session. Zip, we mentioned some director buying here, and just coming off some of those earlier lows that it has been on as well. Paladin, of course, just riding this uranium train along with Boss. Lovisa, also a change at the C-suite there, so its share price rose 8.5%.
Yeah, new MD, Mark McInnes, and that share price gain is despite Citi coming out and kind of poo-pooing the strategic uncertainty. And I'll give it away. That was one of the stocks that we talked about on the call. And some of those laggards look no further than Nufarm, which was off by about 5%.
I think we've got something on West African Resources as well.
Yeah, West African, it's going to be handing over an additional 5% stake in its operating projects to the government of Burkina Faso. So there's a lot of sovereign risk there. In fact, on the call, I'm so name dropping the call, but came up, I think it was Jonathan Takadina saying that he really prefers exposure to miners that operate in Australia because of that sovereign risk. Brickworks down a bit, but remember what happened earlier in the week, Soul Patts as well. So I guess just a few more questions arising about that mega merger, but yeah,
they also ran pretty hard on Monday, didn't they? Coronado Global Resources leading the pack in the small end of town. They're up by almost 40%.
I have got to look into the State Line Resources. It's been up amongst the leaders in the small to mid-cap space for days now. Main Pharma is off by 6.7%. You said why earlier, $4.43. Southern Cross Media also getting hit.
All right, and tonight, of course, the Bank of Canada interest rate decision, along with the ADP employment change for May and the Fed's Beige Book.
Yeah, we saw that JOLTS report last night showing that the U.S. employment market is expected to remain pretty resilient, at least it has been. Tomorrow we get international goods trade balance. A $5.5 billion surplus is expected. And of course, it comes in the wake of that disappointing GDP read that came through here locally today. And in fact, it's got some saying we could even see an interest rate cut coming through in July.
Yeah, I was chatting to Brendan Rinn from KPMG as the data dropped. So great of him to join me as it was dropping. It was very exciting. And he said, look, we're going to have to revisit our forecasts now. So I think a lot of economists, going back to the drawing board. Okay, household spending due tomorrow and the investor day for Downer EDI.
All right, so let's take a look at this market overall. That is the CBOE Australia Index. So really strong session, up by about 0.7%. The S&P ASX 200 putting on close to 0.8%. So, this is a new 50-day high for the 200. So things are looking remarkably strong, I'd say.
Absolutely. All right, let's, as we mentioned, where the ASX 200 is, remind everyone that it's at 85.41 points.
Yep.
And we'll do it all again from 9:45 tomorrow.
Have a good night.